Silver has moved up by a massive 67% since the markets bottomed in October 2022. For comparison, the S&P 500 has only yielded about a 53% return. Of course, silver has been a lot more volatile than the S&P 500, with silver experiencing multiple 10% declines during this period. But overall, silver has been one of the best performing assets since October 2022, flying right under the radar. Now, as you can see, silver recently came back down to retest a key uptrend line, but despite having a small bounce from it, it failed to hold it. The question now is silver likely to continue lower and maybe even reach its longer-term uptrend line? Or whether silver can make this whipsaw signal and continue its strong performance. Zooming out, we see that the very strong, sustained returns on silver are nothing out of the ordinary. The bull market on silver from October 2001 to April of 2011 was over a 1,000% return. At the end of the day, the drivers for gold and silver often overlap. In fact, as you can see, gold has been making new all-time highs throughout 2024 without silver making new all-time highs. Silver is still quite a bit below its previous all-time high from April of 2011. You can see there's a very directional relationship between the two, meaning that most of the times, silver rises when gold is rising, and vice versa. Sometimes silver rises more than gold, but it's very rare that silver can actually rise without gold. So let's assume that gold doesn't continue its bull market, or at least that it stays around its all-time highs as it's been doing recently. Does that then open the door up for silver to make a large catch-up move? To answer that, we need to take a look at the gold to silver ratio. This shows us how gold and silver's price are performing relative to each other over time. This is what the ratio looks like going back to the 1990s. You can see the gold to silver ratio can have some pretty wild swings. For instance, in 2011, the ratio collapsed by over 40% in just a few weeks as silver rapidly outperformed gold. And in 2020, the exact opposite happened as gold significantly outperformed silver. If we add recession bars on top of this chart to indicate when the US economy has been in a downturn, you will notice that the gold to silver ratio tends to go up during these periods, meaning that silver is underperforming gold. The reason for this is simply that gold is seen as more of a safe haven than silver. But outside of recessions, silver can see some pretty large periods of outperformance. If we zoom in on the last few years, we see that the gold to silver ratio generally moved higher between 2021 and 2022. This was not a result of a recession, but we did have lots of concerns around the economy during this period, as the Federal Reserve was hiking interest rates quite violently. But since mid-2022, the performance of gold to silver has been quite steady. As you can see, this major line of resistance has been acting as a key reversal point for the ratio. Every time the gold to silver ratio has tagged this level since 2023, demand for silver stepped in, leading the ratio to decline. Right now, what we're seeing is that the gold to silver ratio is back to the same key resistance again. A full-blown rejection here could open the door for quite a large outperformance of silver relative to gold. In fact, if the gold to silver ratio makes its way back down to this level from 2021, that would be a 27% outperformance of silver relative to gold. However, if the gold to silver ratio breaks above this resistance, it could signal a shift to a risk-off environment. This might suggest that the market is pricing in a potential recession and is too worried about the economic outlook to push silver prices higher. So this could be a warning signal for silver. For now, that's not the case yet, and resistance should be respected as resistance until proven otherwise. One key factor that can help to confirm the direction of the gold to silver ratio is the US dollar index, also known as the DXY. You can see in this chart that the gold to silver ratio has a positive relationship with the DXY. So when DXY rises, gold usually outperforms silver, and when DXY falls, then silver tends to outperform gold. This makes sense because the US dollar index is considered a safe haven. So when DXY rises, it indicates that investors are taking risk off the table and are flocking to safety, which, as we just saw, is a poor environment for silver. Even though this relationship has more often than not held true since 2003, that is not a guarantee though. For example, between June 1982 and August 1983, DXY was in a melt-up, but silver still outperformed gold by 45% during that period. More recently, the US dollar index had an 8% rise since October 2024, which is quite a big move in the currency market. However, the index is now closing in on this key resistance level that also acted as a downward turning point for DXY in December 2022, March 2023, and October 2023. If DXY follows a similar path like the previous instances, then that could lead to another correction in the US dollar index, which would be a positive development for silver, as we just saw. But a breakout here would be a worrying development. Now, if we look at the technical chart on silver, we see that the price has broken below this short-term uptrend. As long as price remains below this line, the risks of further downside are elevated. In fact, if silver comes down to its longer-term uptrend, that would mean a further 13% decline from current levels. Such a move would likely be fueled by recession and economic concerns, which is an environment that we saw earlier was negative for silver. However, if silver were to reclaim this shorter-term uptrend, then that could prove that the current move was a false breakdown. Such a development would likely coincide with a falling US dollar, suggesting a shift to risk-on environments that can lead to higher prices. At Capital.com, we'll continue to provide updates on such market developments. You can trade CFDs on gold, silver, and Dixie on the Capital.com platform. Thank you for watching.